really what I'm going to do today, I have a slideshow I just put together that really just runs through the current state of the market. I did nationally throughout the entire United States because I know everyone in here is pretty much all over the place. But really just going to run through current market updates, how that, how we can pivot as wholesalers, how it is affecting us as wholesalers, and then what we can do moving forward to, pivot and plan for a stagnant market essentially. So I will go ahead and share my screen. And if you guys do have any questions, feel free to pause me and we could chat about it. So, first slide, we're going to run through pretty much just overview of just the general housing market, if you will. So average days on market throughout, again, the entire country just in the month of May is 51 days. So nothing too crazy there. Really, the biggest thing is inventory. So inventory is up 31.5%, for the 19th consecutive month in comparison dating back to 2019. So that's obviously, right, the simple rule of supply and demand, right? With high interest rates, that's pretty much what's driven inventory, making, buying power super tough, especially for first-time home buyers, which is a lot of the times who our flippers are selling to. And then Redfin reported 2.1 million homes for sale in May, which is a pretty big increase, 16.2% increase year over year, with a 3-month supply. So for pretty much just wrapping this up, what does this mean? So now buyers, right? Buyers do have more negotiating power. It's not a seller's market anymore. Buyers can pretty much pick and choose that perfect property, and they can negotiate, and they're going to ask for concessions and X, Y, and Z. So for our innovations, that's something that we have to look out for, adjusting our underwriting, et cetera, which I'll go over in the end of this. And then mortgage rates obviously remain elevated versus historic lows. I don't really think those 2.5, 3% days will come back ever. If so, probably no time soon. So really right now the market's just stagnant. Interest rates haven't gone up, they haven't gone down. There's really been no national real estate news that has given sellers or even buyers an incentive to either sell for a lower price or buy at a higher price, etc. So naturally buyers lower their ARVs, they become less competitive, and right, even our investors, they can go ahead and pretty much pick and choose their deals. Just some trends, 4 days on market, national median. Again, that's the median, not the average, is 51 days in 2025, which is just an increase of 6 days year over year. So not really the biggest issue. I don't think days on market has been too crazy, but it is going to start to skyrocket with inventory being high, especially if rates do not go down next month. Um, it obviously does vary significantly by region. Me personally, I'm in the southeast. Here it is about 62 days, so it is a little bit higher than the average. For those of you out west, I have no idea, but ChatGPT definitely knows, so feel free to ask them. And obviously longer days on market, right? Our buyers are gonna underwrite a lot differently. Their ARV is gonna take a cut, and then their interest, right? If they're used to turning these and selling them in 4 months, they're probably going to account for 6 to 7 months, which is additional interest, which increases their bottom line, which for us increases their offer to us as well, right? Um, Moving on to inventory trends, this is pretty much right, supply and demand. So active listings up 31.5% year over year is pretty astronomical. Over a million homes listed nationally, which is the highest it's been since 2019, which was obviously pre-pandemic. So that is definitely some big news there. For 3 months, we're pretty much at 3 months supply of inventory, below the healthy 4 to 6 months, which is where that usually should be, which again gives buyers more, less pressure and more purchase power. And then low mortgage rates limits even faster growth, obviously. So really the solution to all this would be the Fed lowering interest rates. So if you guys know anyone at the Fed, tell them to lower the damn rates to help us out. Um, as for just buyer activity, again, when I'm talking about buyer activity on these slides, this is for retail buyers, not necessarily our investor buyers, our fix and flip buyers, our hedge fund buyers, etc. But pending sales are down 2.5% year over year. New home sales fell 14% in May of 2025 alone. So in May, obviously that's a big hit, and that is going to continue to trend for June. The June numbers have not come out yet, but I'd imagine it's probably somewhere around that 14%. And the crazy thing that when I was putting this together, I was like, well, what happened from April to May that, made these sales fall by 14%? And there really wasn't anything specific that happened in the market that made that happen. So I do want to dig a little bit deeper and see what I can find there. 44% of consumers say it's just a bad time to buy, mainly because um, interest rates are still high, but honestly, for a retail buyer, it actually, I personally think it is a good time for them to buy because, right, they can negotiate. They have a lot more inventory to choose from. They just have to find, there's a lot of stale listings out there. There's a lot of listings that are over 100 days and sellers that, may not be insanely motivated, but their listing agreement is coming to an end. And that's where someone like us can come in and swoop in and hopefully get a deal on it, or a retail buyer can go get a deal on it as well. High cancellation fees, and this again is for retail buyers, is up to 14.6%, which is super, super high for retail. A lot of what this is could be buyers not qualifying for their loan, not passing inspection, anything along those lines, or buyers just not being able to afford, their monthly mortgage payment at 6.5%. So that definitely does play a factor in everything. And then first time home buyers, right? Majority of the deals that we are getting under contract and signed to flippers, our flippers are exiting between, 350,000 to $500,000 on average, which is where first time home buyers are buying, right? So first time home buyers being down 24%, if our buyers know that, they're going to adjust their ARV accordingly as well as their holding costs, which is going to affect our offer to the seller. Just kind of market synthesis and outlook. Again, just kind of retail, very broad. Market shift toward balance, but still affordability strain.
No, I'm just go grab a seat. Can I just have a seat?
Oh, he's not talking to me. Let's mute him. Um, High inventory means obviously better deals for buyers, but the biggest caveat, the issue that we've been having in our business is that a lot of these sellers still think it is a good market and they are still expecting to sell at, a set price where it's on us to go ahead and explain to them, hey, the market is in a bad spot and really realign those price expectations. So that being said, I mean, we really need to, number one, make sure the properties you're offering on when the lead comes in. Not, first thing we're doing is checking their equity, making sure they have some level of equity to take a discount and have room for our fee. That I think that's the biggest thing. And secondly is motivation. I mean, motivation is always super important, but motivation right now, the only people that are going to make a move are people that have to, whether it's foreclosure, divorce, probate, inheritance, relocating for a new job. Those are the people that have to move, right? It's not really going to be, this isn't a market where you contact buy and hold investors and, they have a cash flowing asset. Yeah, it's run down and whatnot, but why are they going to take a loss if they don't have to? So really targeting motivation and equity is super important for us wholesalers. And these sellers, obviously they have to, and this is for us for novations, we do have to price realistically. Personally, for me, if I usually take 10 to 15% depending on inventory off my MLS list. You actually 25% because when I say that I run my comps, get pictures back, and I say, all right, this thing's good, it'll qualify for innovation. I think it's worth 250 as is. I'm going to go ahead and list that at probably 235, 240 to, gain traction, get eyes on it, make having agents realize that it is a deal. So I'm just going to take off another 10% due to this. Obviously, we don't want these
Here.
novations to sit forever. Um, let's see what else. Yeah, obviously we have to underwrite conservatively, which I will get into. And then pretty much just kind of going back to our buyers, right? Our clients. How the pros for them as of right now. Well, this is actually more for us, but longer days on market, right? There's more motivated sellers out there. So pulling lists with expired listings, canceled listings could definitely be a good opportunity. Those sellers, they've been listed for well over 100 days, multiple months, and they've, the market has told them that the property is not worth what they and their agent thought it was, right? So that's where someone like us can go in, and those people have either canceled the listing to decide that, hey, we're not going to sell, it's not the right time to sell, or we need to go another route. Let's see what our options are. Maybe their agent was just shitty and they're going to go with another agent, or maybe they're going to adjust their price accordingly. If they have motivation and they can't afford to sit on the market any longer, that's where us wholesalers come in and can go ahead and get a good discount there. Um, Rousing price reductions, I had to do in the past probably month, I've done probably 4 price reductions, and I was only successful on one of them. And all of these were, just lack of detail on the condition of the property we got out there, and we determined it needed a lot more work. And seller wasn't transparent in condition, which that's usually a very easy reduction for me to get approved. Um, right now, it's not because these guys already are thinking they're giving up the house and letting it go for very cheap. So those haven't been successful. And obviously higher fallout rates, which we mentioned, and then low entry prices in multiple markets. For cons of these investors, pretty much this is comparing back to 2022. Hard money rates pretty much went from 9% to 12%. I obviously higher cost of funds. So selling to your VIP buyers, those that are vertically integrated, that are either self-funding their deals, not paying interest, are going to be your best buyers, or those that, are borrowing private money lower than 12%, 10%, 8%, whatever it be. Understanding your buyer's buy box and just knowing within your local market who is the best buyer right now, right? Who is vertically integrated, whether they own their own crews and get material and labor at cost, or they self-fund their deals or get cheaper money than retail, is who you're going to want to be selling these to. And then obviously longer resale times, this increases holding costs, right? So like I explained before, this is just increasing the flipper's bottom line, which we obviously have to count for in our offer price. Obviously material and labor with inflation, those prices are going up as well. So what used to be a 40K reno is now a 50K reno, just with everything going on in the logistics world. And then obviously conservative ARV as well. I had a deal last week that we lost. A year ago that the ARV on this property was 390 all day. There was comps to support it, and I got Lockbox got a ton of buyers in there, and everybody came back with a 365K ARV. It was like a 10K spread that I had. So obviously, try to reduction did not work out. So there's a deal again, a market that I'm quite familiar with, but I wasn't, I wasn't going forward and being proactive about, days on market and effect on reducing my ARV based off just the current market status. So, what I think is best, probably taking 10% off of your ARV, comp it how you would normally comp it. Definitely don't be conservative. Always take the floor if you're in between numbers. And then once you land on a number that you would normally do, I would go ahead and take 10% off of that for your ARV. Yes, you're obviously making lower offers, but would you rather lock up a deal, get it to TC, get it to dispo, waste a ton of time, and then learn that you locked it up too high, or would you rather get ahead of the curve and focus on quality over quantity? For me, I've done the let's lock it up and see what happens, and we end up just wasting a ton of time. So I would definitely suggest making these pivots. And yeah, your numbers, your offer to close rate, your conversion rates are probably going to fall a good bit to this, but in the end, you're saving the time on the dispo side of things to reinvest in acquisitions to go and find those motivated sellers with equity that you're actually going to make money from. Any questions so far before I keep going? Cool. Sounds good. Just in regards to buying power impact for flippers, obviously bigger discounts are going to be needed up front. They say 20 to 25% off retail, which is standard, right? I sell them, I underwrite all my deals to sell at 75% loan to value. Again, I'm now underwriting at 65% loan to value, so taking 10% off that bottom line. And again, holding periods, for a standard flip, usually are 4 months on a 50K reno. I'd say 4 months in and out, sold in 4 months. I'm now underwriting that at 6 months. That's usually about a 5K difference depending on where they're borrowing at. But 5K, sometimes that's our fee, right? And then obviously for these flippers, if you guys do flip, I flip a good bit. I don't, for those of you that do flip, not going all out on your flips, avoiding over improvement and doing exactly what needs to be done, and not doing anything extra. Because these buyers in a market like this, they're not going to pay for the luxury upgrades because there's plenty of inventory and days on market is up there. So just do what you need to do and get out. Conservative comps as well, like we explained, adjusting your ARV. and then flexibility as well. You know, giving these buyers a longer closing period, giving them some sort of concession, maybe giving them a discount on closing costs, really whatever you need to do to get the deal done is best in this case. For our buy and hold investors, DSCR loans, which is debt service coverage ratio loans, which is what most of these buy and hold investors are using. More of those mom and pops, obviously not the hedge funds. These rates, as of last year, were 7.25. Right now, they're 7.75. So obviously, that's an increase, which definitely affects cash flow. Insurance premiums are still pretty high. There hasn't really been any drastic changes on that. Cap rates still, compressed in popular markets. Obviously, we don't use cap rates in single family, but if you are wholesaling multifamily or anything like that, definitely make note of that. And then tenant affordability pressure is going to limit rent growth as well. Rent was increasing 10 to 50% year over year for a while, and now rent is pretty stagnant, right? As general affordability increases and whatnot, our tenants aren't going to be able to pay what they used to pay, or you can't rely on an increase in rent rates as of yet. If you're adding value, obviously you can increase rent, but a unit that rented for $1,000 last year isn't going to rent for $1,200 this year. And this is interesting too. So a lot of these buy and hold deals that were deals in 2021 and 2022, if you were to pencil those same deals today with the updated rates and updated rents, they don't pencil. They're just not going to cash flow and they're no longer deals. So I'll run through some examples on what, would be a deal in today's market and what wouldn't be a deal in today's market. So here is pretty much just an example deal and the impact that this has on that. So on a property that a flipper used to pay 300 on is now going to be around 270. An ARV that was 425 is now most likely going to be around 395. Hard money rates again for our flippers that are borrowing hard money went from 8% to 11%. I think it's even higher than this. I'd say probably about 13 to 14%, obviously depending on the flipper, their experience level, and all that good stuff. And then holding costs, obviously, with longer days on market has doubled. And then net profit shrank. I don't know where they're pulling this metric from, but essentially with all that above, net profit on the same deal would be 45K is now 15K, despite obviously lower purchase prices. If they're buying at that 75% loan to value, assuming these terms above, a 45K profit would now turn into a 15K profit, which is less. A buyer's just not going to do that. There's too much risk involved. So for us wholesalers, how exactly is this going to go ahead and impact us? Like I said before, we need to make sure when a lead comes in, we're going to check their equity. We're going to get them on the phone. We're going to confirm that they have some level of motivation, hopefully very motivated. So if you're reliable on, cold caller SMS and you're hitting tired landlords and things along those lines, that's not going to be your best demographic right now. Your best demographic is going to be pure motivation. So you want to target vacant properties, you want to target pre-foreclosures, divorces, probate, inheritance, and all that good stuff. I think you're still going to get deals from tired landlords. It's just going to be ones that have troubled tenants that they have to evict, or the places, that maybe they have to have the HVAC replaced and they don't have 15K to do it, therefore they're willing to sell it. It's obviously the summer months, so HVAC issues can definitely create motivation for some sellers. And then obviously higher cancellation risk, right? Industry standard contract to close rate is usually around 60 to 70%. If you're above 70%, props to you. But you definitely shouldn't be below 60% in my opinion. So obviously to get ahead of that, we need to adjust our numbers, our ARV, as well as just our general underwriting to make sure that we are locking up deals with enough room for a flipper to go ahead and make money in 6 to 8 months. I actually did have an end buyer back out. He gave up his 5K EMD because he basically he went ahead. It was a 90-day close, got him under contract 60 days ago, and the market changed, and he ended up having to go ahead and forfeit his EMD. The 5K loss was much better than what the loss could have been if he were to move forward. So Just making sure that you're on the same page with your buyers. If you do lock up a buyer and you have quite a while till closing, I would check in with them weekly, just making sure that they're still good to go. Obviously, don't say, "Hey, the market's really shitty. Are you still good?" Just say, "Hey, wanted to see if you had any," just make anything up. Wanted to see if you had any interest in closing a little bit earlier, later, whatever the excuse needs to be based off your seller situation. And then another way to just bring up conversation would be, hey, want to understand a little bit more. I've enjoyed working with you. Want to understand your buy box a little bit more. What are you seeing right now in the market? What are you interested in? Where are you buying at? Type of thing. And then he'll give you an update on his buy box, etc. Gonna get a little bit redundant here, but obviously lower ARVs, taking, I think 10% off is your best bet. So still comp those deals as you have been comping them, as long as you've been in this business, and just take 10% off the top there and use that number as your new ARV. And in regards to holding costs on my calculator, I have always accounted for 6 months in holding costs. If it's a bigger deal, a luxury deal, $1 million flip, obviously I'll adjust that. But make sure that I don't know what calculators you guys are using. If you are using the level up calculators, there is a section in there where you can go ahead and adjust the interest rate as well as obviously loan term, however long the project is going to take. Um, and then obviously pretty self-explanatory. We obviously just need more spread in the deal to attract buyers. Um, and that's that for that slide. An example, again, this is dating back to 2022. So an ARV that would have been, 400,000 max offer 280, that's at 70%, with an assignment fee of 10K. Obviously, you would now need that about 10K lower. As for 2025 adjustments, pretty much ARV is down 5 to 10%. Let's always take the ladder on that, take the 10% off. So an ARV that would have been 400 is now going to be 375. Buyer obviously wants a deeper discount. They're not going to buy at 70%. They want to buy at 65%. So their Mayo of 280 is now down to 243, which is a pretty drastic change. And obviously us wholesalers need some room, to make at least a 10K fee, which means we got to get that under contract at 233, where we would have been at 270, back in 2022. So pretty much impact for us wholesalers, we need to contract at least 40 to 50K less than we were doing 2 years ago for pretty much the exact same deal. Moving on to just the final slide, pretty much just advice. So you got to be super transparent with your sellers. I love to share news articles with them. If you can get specific to the market that the property is in, or even just the state, that's great. If you need to just do a national one, a national real estate update article, you can send that as well. The reason I like doing that is because this allows them to hear from a third party, right? It's not if I'm just saying, hey, yeah, oh yeah, now days on the market are up 15% in this market, inventory is up 20%, the market is in a terrible place. They're not just going to believe me, right? Let me get them some third party facts, send them that article, have them read through it, and then they're going to interpret it however they want to interpret it, right? We can't convince them to believe that, but we can, before we make the offer, put that precedent in their head, view it as kind of a first initial low ball, if you will. And a lot of times sellers will come around by hearing it from a third party source rather than just the sales guy who's on the phone with them, right? They'll think you are obviously a little bit biased. Again, run ultra conservative comps. For me, we're taking 10% off what our ARV normally would be. And then prepare solid deal packages for buyers, right? Go with photos, send them the comps, put together an estimate, a detailed SOP based off your walkthrough, your consensus. We do this on all of our deals. I have a flipping background, so I can review pictures, put together a scope of work, and get at least within at least 5K of what the actual reno is to hit said ARV that I'm marketing it at. So instead of just posting your deal with address, picture link, ARV, estimated reno, asking price, get a little bit more detailed, put some comps in there. If you can get a video walkthrough, great. And I think that repair estimate, helps your dispo guy explain to them why this is a deal and how we're seeing what we're seeing and why we contracted this in the first place. And then this, I mean, there's a few ways you could do this, right? You can just say, you can keep your underwriting the exact same and say you underwrite every deal to make 15K. You can now say, all right, I'm going to underwrite every deal to make 25K or to make 30K. And it's still going to yield pretty much the same mayo if you don't want to do ARV, 10%, etc. Um, Also, obviously, avoid thin deals. Being super, super selective on what you contract and what you don't contract. I've just seen, my first year, our close rate was like 42%, which was just terrible. We were just wasting so much time. Part of that was because I was nationwide and we were just in so many different markets. But I've definitely learned from that and really just for me, like we need to have at least a 20K spread to contract it. Obviously, if it's 10 to 15, we're still going to move forward with it. We're just not going to be as optimistic on it. So just really saving your team time on the back end and for your acquisitions guys, right? If they're locking up deals and your overall contract to close rate is 50%, it's kind of hard to get them to buy in if they know that they're working their ass off all day, making all these calls, making all these offers, and they work so hard to get a contract. Once they get the contract, there's only a 50% chance that they actually get paid on it, right? So those guys that are commission based only will struggle with that. So definitely making sure that they're aware of these adjustments and why you guys are making these adjustments to your underwriting is super important. And it is important, I think, to have a conversation like we are all having right now with your team, just letting them know where the current market sits and reassuring them that you do have a plan moving forward, right? And you're not just gonna keep doing what you're doing and see what happens. You're getting ahead of the curve and you do have a plan to maintain your progress or get back on track to where you need to be. Um, Obviously, building deeper relationships with your top investors. Like I said before, just calling them, understanding their buy box, even if it's a guy that you may not have a deal pending right now with him, but you've sold a good bit of deals to him in the lot and you've sold a good bit of deals to him in the past. Check in with them. Hey man, how's it going? Are you still buying? What are you seeing with this market? X, Y, and Z. They, could have updates. Oh, I'm borrowing cheaper money. I can offer higher prices or yeah, I'm being really selective on, X, Y, and Z. They'll just give you some feedback, and obviously that helps you build relationships with them. And then you can also strategize, right? Like we did a deal last month where there wasn't any room for me to make, it was a VIP buyer. It wasn't really any room for me to make a fee on it. So, I essentially just assigned it to him for $0. And then he used to pay me out 10K on the back end. 20K if he is to make over 60K on it. So you can do stuff like that just to get deals across the table. Obviously, I would only do that with a buyer that you know, like, and trust. I wouldn't do that with a first-time buyer that you got from Investor Lift or a Facebook group. I would only do that with a guy that you know very well and is going to honor that. And I have agreements that I put in place for that. That's recorded with title and everything. Essentially, it's just a lien against the property after they close. Um, Other than that, embrace creative terms. I think novations are obviously right. We always want to novate. The MLS is our best buyers list, right? Over Investor Lift. So we just have to be transparent with our sellers. For me, the minimum time frame I get on novations forever has always been 60 days. Now I'm making that 75 days, and I want as long as possible. If I can get them to agree to 90 days, 120 days, I'm going to take it because if I can find a buyer sooner, we can always get it closed sooner, right? So the more due diligence, the longer time period you can get, the best in a market like this. And also don't be afraid to lower your price, right? We usually lower our price on a weekly basis. It is going to depend on our time period. We have a lot of stuff sitting right now. I think I have 5 novations listed that are over 35 days, which is definitely interesting. So it's super important to just give your seller feedback, right? If you pitch a novation correctly, they do know that the property is listed on the market, right? You're using all the best resources to get them the highest price possible. And obviously, you have enough spread to make a dollar on it for ourselves. So, as you have showings, as you get updates, even just the market, share that with them so that when you do find your buyer and you do need to get a 5, 10, 15, 20K reduction, it's not just out of thin air, right? You've kind of prepped them for that. You've kind of done a soft reduction. We always do soft reductions in regards to condition or just overall layout, whatever it is. If we have a showing, whatever that agent tells me, I'm just going to relay. I'm going to put my twist on it, obviously, but I'm going to relay that to the seller and kind of prep them for a soft reduction if I do think it's coming, so that when I do make that reduction, it's not what the hell XYZ. So I think that is definitely super important. Um, Other than that, that pretty much wraps up this slideshow. So happy to open it up to questions or any just overall thoughts on what I shared today.
I got a question actually. How are you, I guess, how are you and your team dealing with like on market properties? Like, let's just say a lead comes in and it's like an agent or the seller has put in a request to get an offer, but it's on the market. How do you guys navigate that? How are you like, what are the conversations sounding like? Are you just kind of pushing more so for still discounted cash offer, or are you just trying to push more for a creative? And like, how are you training your team on that?
So number one, it's because it happens both ways, bro.
Yeah.
Like right now, I get a lot of agents that will actually fill out, a Facebook ad or any inbound ad, which tells me, oh shit, okay, this guy knows or this agent knows that they're listing agreement is about to expire. And they also know that the only way that they get paid is if this property is sold, right? So their client is not happy with them. So therefore, I'm going to get that agent on the phone and I'm going to, pretty much make that general consensus. I'm not going to say that brutal to them. But I'm
Right.
going to say, what's the feedback you've gotten? I'm pretty much going to make them open up and tell me everything that's gone on. And obviously within that, we're going to make sure that the seller has some level of equity. How many price drops have they done? If they haven't done many, they probably don't have equity. You guys all have batch or proption. You can go see how much equity someone does have. And then I'm going to see if I can work something out with that agent. And I'm just going to make a lowball offer at first, an offer that pretty much has me, obviously, depending on the condition. If I can flip and there's room to add value, then I'll go ahead and make my standard flip offer. If not, I will go ahead and just, if it's in good tip-top condition, I have no other option, and you really can't even wholesale it. I really have no other option than to go ahead and underwrite it to just go ahead and list as is, right? So if they started out at 350, 6 months later they're down to 290, that tells me that this thing probably needs to be sold at 260. I'm going and offering around probably 200, right? So those most of the time don't work out. And then same thing with sellers, right? If it is a seller that is submitting the lead, right, that's coming through and they're saying, oh, my agent sucks. We've done all these price drops and nothing's happened, X, Y, and Z. I'm just going to continue to, do our basic script where we kind of bash on agents a good bit. Oh, what has the feedback been? Have you gotten any offers? Do you need, and I'm gonna figure out more about their situation, right? Do you have to be somewhere by a certain date? Yeah, my new home, I have to close on my new home in 3 weeks, and I need all the funds for this sale to go ahead and do so, right? That's a motivated seller that we can get to reason with the discount. So I'm going to start with, okay, how much do you need to go ahead and put down on this new house to make this happen? I'm going to get that number, and then I'm going to make sure that that number is possible, and then I'm just going to back them in all the way to that number and say, hey, is it worth you? I know it's a lot lower than you thought you were going to get for the house, but number one, this price does get you into your new home. If this price is too low for you, then you're going to have to forfeit your EMD. So it's on you to decide what's worth more, giving up some money here, but getting to where you want to be, or staying here, losing the house and losing, 5 to 6 grand, whatever it be. Um, is
Solid.
that pretty similar to you, Delano, or are you doing something else?
Yeah, no, like I was talking to my team about it today because we have a lot of leads that are coming in from homeowners who are already listed or like agents. Like we just saw one that was like an agent has it listed and they've been trying to sell it for like 60 days at this point. And it's
Yeah.
like I'm like, all right, well, maybe instead of like the cash offer, maybe we could structure it creative and offer like seller finance possibly, and then just sell the note, at that point. But I'm just seeing the kind of like what's a good strategy for that because like a lot of times like these people are not open to creative or they're not open to seller finance and then they're like no, I need all the cash up front, and it's like yeah, now we have that conversation. We're like, well, hey, what's more important to you? Is it like getting out of it as soon as possible or trying to get as much as you can, because you might be trying to price shop until you can't anymore, and then you got this offer here, which is a better offer versus you taking cash, now, right? So it's kind of like giving them an ultimatum, but I just kind of like was like putting some things together just to try to like make the conversation more fluent with
Yeah.
with the guys, with the homeowners that are dealing with those scenarios. But I just wanted to see if he had any helpful like tricks and tips with like the conversations there. So
Yeah, and I think again, just for the sellers too, right? They're listed with an agent, they submit the form. I'm just gonna agree with them, right? I'm gonna just get them to continue to agree that the market's in a bad spot. I'm gonna say, yeah, I have multiple flips listed on the market right now, and I thought I would have had these sold months ago, but that's not the case. And oh, it's beautiful. Let me send you the link. Look at how beautiful this house is. I flipped the crap out of this place, and this isn't selling. Then they're thinking, I don't even have to say it. They're thinking in their head, well, shit, my house looks nothing like that. How is mine gonna? No shit, mine hasn't sold yet, right?
right,
And then you play that into that's why, due to additional holding costs and longer days on market, my offers have changed. My offer is probably down 20K than what it would have been 6 months ago to you. And then you kind of, push them away and say, hey, I don't know your situation too well, or if you do know your situation, based off X, Y, and Z reasons, it might not make sense for you to sell right now. Why don't you hold on to it? We can stay in contact and let's let the market bounce back a little bit so that you can get a price that you deserve, right? And then, if you don't know their motivation yet, that's usually when motivation will come up. If that is, they're not in a rush and that is, their advice that they take and that's what they do, you're, a great person because they look at you, they're thankful for you, right? Because you connected and you advised them. You didn't just make them a low ball offer and try to get them to sell, right? You were actually looking out for them and you were genuine in how you handled them as a lead. So those are the leads that I love, right? When they trust you and they really do appreciate you. And those are the guys that may come back in 6 to 8 months and say, all right, Devin, I know I want to work with you. What price can you do? And then you
right,
go ahead and lock up a big old assignment fee.
yep,
All right, I got some questions in the chat. So I did share the slide deck in the comments. It's available to all y'all. So go ahead and click that. Alex said, are all no price reductions canceled or are you spending time on small deals? Alec, what do you mean by that?
No, I mean you kind of answered it. You mentioned you had one you had one where your buyer you were gonna get paid on the back end. But like I was just curious, like if you get a price reduction and it's like a 2K deal, like a 1K deal, you would still get it done.
Yeah, like I had one yesterday. My buyer was at 120, um, and the utilities were turned off. I had it under contract at 117, so I was set to make a 3K spread. So he goes back. We finally get the water turned on, and he ended up being a leak in one of the pipes, and it caused settling in the foundation, and there was foundational issues, and his 120 went to 115, which I thought was very, very, very fair. He sent videos and everything. So I went to the seller, obviously explained everything like that, and this guy was just stubborn as hell. He wasn't willing to come down on price at all, but I was able to get him to 115. What I could have done, my buyer has 5K EMD non-refundable in escrow. I am now at a 2K spread. I could go to my buyer and say, hey man, he wouldn't do anything. We're break even at 115. If you can't come up at all, and this is what would have happened. If you can't come up at all, then it is what it is. It's terminated, and you lose your EMD. And then what I could have done was just said, hey, unfortunately we can't do that. Terminate and just took his 5K EMD because that would have been more than my 2K fee, right? But me being a good person to the wholesale gods, I know that I'm not going to screw anybody over. So I went ahead and, he came up to 217, obviously. And yeah, we're closing that at 2K, right? Reason we're closing it is because all the work's already done. $1 is better than nothing. $2,000 is better than nothing, right? Yeah, it lowers my average assignment fee, but at the end of the day, it does maintain my contract to close ratio. And just good faith, right? What comes around goes around.
No, cool, cool. Appreciate
But I wouldn't contract a deal if I only think I'm making 2K.
Yeah, like
Um,
if it just happened that you were making 2K, but you wouldn't get a contract to be like, oh, I can make 2K in this.
yeah, yeah. Ryan's question was, at what price point flips are you doing and avoiding luxury finishes. So I do everything from like right now I bought a mobile home for 90 grand and we'll sell it for 270. And then I have another flip that I bought for 1.2 million that we're putting 600 into that will sell for three. So I pretty much go all over the place in regards to my flips. Obviously the $1 million ones I am going all out, right? I do need to match the condition of those other properties. It's more on my, anything below 600,000 really. I'm not going to go the extra mile and do all the land, spend 15 grand on the landscaping. I'll pretty much just get it to look pretty, make it have some level of curb appeal and go from there. I'm still, I'll just do cabinets that I would usually I basically for my cabinets we have pretty much one, two, and three, three different levels. There's a name for each of them. But anyway, pretty much I'm just doing the bare minimum. I'm not going to go ahead and put luxury cabinets in a $600,000 house. I'm just going to do my standard CDL cabinets that I usually would put in my 200K, 250K flips. And cabinets are cabinets, right? Yeah, it's cheaper. It's really the only reason is the quality is still pretty much the same. The only reason it's cheaper is because some of them come pre-built, some of them become, built already. So that's that. I mean, it's more of like taking the risk, like with an appreciating market. If I've seen that, hey, like this house that I'm sitting in right now, I was all in. I when I first underwrote it, it was purchase price 770, reno 500. I was gonna sell it or refinance at around 2 million. I refinanced 4 months ago and it appraised at 2.3 million, right? So this is a property that appreciated over the 10 months throughout my project. And this is just due to location. I'm in an amazing neighborhood, and that's that. And that just goes down to knowing your market and knowing your comps and knowing that if you have, I mean, the houses over here go for $900 a square foot, right? If you're in a neighborhood that's over $700 a square foot, you should be pretty much good. But those first time home buyer markets, I'm not going to go ahead and hope that the property appreciates and I can sell for a higher price. All right. Dwayne asked, do you think we should be focusing more on novations or more on off-market deals right now? That's a great question. A great question. So, um, Dwayne, and I'm curious to see kind of what your process is. For me, every lead, right, we're always that first offer is going to be our straight cash offer, white glove experience, quick close, closing as quick as 7 days, right? Wherever I need to be to make a 20K fee. That's always going to be my first offer. My sales guys need to hear a hard no before we go ahead and even offer novation, right? They need to hear a hard no, ideally get a counter. Say our mayo was 200, right, for cash. They come back at, if they come back at 280, yeah, it's probably a dead lead. I don't even need to pitch novation because there's really nothing there. But if they're at 225, something like that, then yes, I'm going to go ahead and obviously pitch novation because we want to monetize every lead like we can. But the with the adjustments we're making, it's affecting our cash offer just as much as it's affecting our novation offer. And obviously, if they're accepting your cash offer, yeah, you're going to move it a lot quicker. But you do need to go ahead and account for that in your underwriting. Whereas novations, you just need to let them really set that expectation and make sure that they do know that this could sit for 65, 70 days before we have any news for them. And giving them that feedback throughout that time period with showings, with market updates, other comps, deals that, there's most of the time there was another property that was listed in the neighborhood that sold for 50K less. Going to bring that to going to let them know about that and just really provide them with all the resources that I'm getting and knowledge that I have. But I mean, I don't think it's not, if you could offer a higher price on innovation versus your wholesale, I'd say yes. But I think, just with at least the way that I'm making a pivot and how I'm underwriting, my offers are still pretty much the same. All right, what else we got? Kevin asks, you run these numbers at just 70% of ARV instead of 70% of ARV minus rehab. It's always 70% of ARV minus rehab. I have always underwritten my deals at 75% loan to value. That's what a hard money lender needs to see to lend on a deal, at least the 10 that I've used in the past. But again, I mean, if you're underwriting at 70%, you're not hurting yourself. If you're underwriting at 80%, anything above 75%, then yeah, you'd be hurting yourself. So right now we're doing 65% is where our offer price is going in that. All right, I don't see any other questions in the chat, but feel free to come off of mute if any of y'all do have any questions. And then for those of you that joined late, we did just run through a slide deck just on market update and whatnot, and that link is in the chat if you guys would like to take a look. And this call is also being recorded and will be posted in the Discord afterwards. But any other questions from anybody else? Thoughts, comments, concerns? Have you guys, I mean, I guess, would you guys agree that you're kind of seeing this as well in your business? Days on market on your innovations increasing, sellers just being so set in their ways and stuck on price that they're not really negotiable.
Yeah, I'm definitely
I've seen
seeing a slowdown for sure in like the like few months, even from a few months ago, like I'm starting to see like stuff is not moving as fast as it was before as well. So I think it's just like everything that's transcribed within like the past few months and everything kind of because notoriously, obviously, like the summertime is like usually like one of the best times to sell the properties, but
Mhm.
now it's like things are moving slow. Like we have two novations, and I'm like, we haven't gotten any calls on any of them. So it's like, I agree, man. It's kind of like pre-COVID. Like a lot of people were at like 65% of ARV, like you said, even 60% ARV. So minus repairs. So yeah, I think we
Yeah.
just kind of got to like run a tighter ship on those numbers because it's just a lot of uncertainty right now in the market.
Yeah, and just overall, like I'm pretty sure everyone on this call owns their own wholesale company. So like even overall, like right now, kind of like the consensus that me and a lot of other coaches and other, guys that are doing multiple six-figure months have kind of come to is, right now is not a time to experiment or do anything. Double down on what's working. You're not going to have your best months right now, until something happens in the market and there is, rates go down or something happens to give someone an incentive to sell at a discount or anything like that. We're really only monetizing super motivated deals, obviously with equity, and it's really just a matter of, weathering the storm, and making it through the storm right now. Me personally, I doubled down on marketing 2 months ago, and I doubled down again last month. So that's tough, obviously. So we'll make additional pivots. I'll reduce my marketing spend a little bit to get through the storm. I have a good bit of closings coming up, so that'll rejuvenate my finances, and then we'll pretty much go from there. Var, I think you had something to say, or someone had a question before Delano went. Destry,
They're not going. I got a question too.
what's
Um,
up?
so slightly off topic, but like I mentioned at the beginning of the call, we filed multiple memos. On one of them, we have one in Washington, and the seller's getting his lawyer involved and stuff like that, saying that, our contract is null and void, all kinds of stuff. I've never actually had a memo come back around. Like I've never closed on that. But what is that process like? Like they just reach back out to you when they're ready to close and say, "Hey, we want to negotiate an amount," or does a lawyer reach out? Like, what's your experience been like with memos? And are they actually pretty successful?
Yeah, so it is always specific to each state, even each county is very different. Where I am, I'm in Charleston, South Carolina. I'm in Charleston County. Here you have to go in person, file the memo, and then you have to go once every month. So say that I go and file today on July 2nd. I have to go next month on July 1st or July 2nd and do it again. If I go a day late, July 3rd, it's done. So like that's a little bit different. You have to go each month. I don't know too many jurisdictions that are like that. That's just what the one that I deal with the most. But for the most part, yeah, like I can show you. Probably take me a second to find it, but it'll always come up on a title search. Like we had a property in Atlanta that we were set to make like a 15K fee on, and then it came back with a 28K memo, right? So I call that other. It was another wholesaler. I call him. We were able to reason, and we ended up got the seller down a little bit and was able to split the fee there. But it does change per jurisdiction. What I do is I have just a list of all the memos that I've ever filed. And I always have, once a month I'll have my assistant go through and just, make sure that the memo is still active. You could do that the same way you file it. If you have your title company file it for you, you can have them check. If you do file it yourself, you can log on to most county portals and make sure that that memo is still there.
Okay.
And
Sounds
that
good. I
even, I
appreciate
mean,
it.
for the ones that like, I'm sure you do have a list. If you don't, you can figure it out which ones you have filed memos on. I would immediately after this go and look and make sure that none of those properties have been sold. Don't rely on Zillow. That usually takes about 30 to 60 days to update. So I would rely on county records. Those are going to be updated, the soonest out of all resources. Even Batch and PropStream are a little bit behind the curve. So do that. And if you find one that sold that you had a memo on, look into it. You probably filed it wrong. Um, that would really be the only option. You didn't file it correctly.
Okay, sounds good. And then going off of what you're saying too, like obviously the solution here, like we're all kind of feeling it. Shit's happening in the market, it's stagnant. Things are harder to sell on the back end. So the solution is to get tighter deals, underwrite them better, make sure that they're solid deals. In terms of your leads, I don't know if you're doing inbound, we're doing all inbound, but are you noticing that still these sellers are like still stuck in la la land thinking like, oh, my house is worth a shit ton? Or are you starting to see a lot more pain in the market of like from the seller side? Because theoretically, eventually they should start seeing that, oh, shit's not selling. So we need to start making adjustments too. Are you guys starting to see that at all, or um, are they still kind of like pretty high on their numbers?
Yeah, I mean, I do a lot of outbound too. I'm 50-50 outbound and inbound, and it's the same across the board. And that's why there needs to be like the news isn't talking about real estate at all. A lot of our clients do, they're not on they're reading the newspaper or they're watching Fox News, hopefully not CNN, but watching some sort of news platform, and there's no one's talking about the real estate market, right? So they don't know any better. They're still gonna, they look up on Zillow, see there's estimate, boom, that's what I want. Oh, that's low, I want more than that, right? They're gonna be set in their ways, and that's when I'm gonna leverage an article, to kind of put them back in, get them back to reality. A lot of times I'll just instantly push them away. And the way that, like, for me, I really don't love Facebook leads anymore because so many guys are doing it. And the way that algorithm, those, you guys all know how algorithms work, right? If I say something, it's gonna pop up on my phone. But my point being is that say that they fill my ad out first, right? And I get the ad, I get them on the phone, I get them an offer, I then give them 24 hours to think about that offer. Within that 24 hours, chances are they're going to get back on their phone, they're going to be scrolling again, and then they're going to see another guy, and then they're going to fill out his form. And then he's going to give him a call. He's going to make an offer. And then he's going to give him 24 hours. And then they're going to start getting all these ads for cash offers, cash offers, cash offers. And then you just end up in a big bidding war. That's what's been happening with me a lot with those, at least the motivated ones, the ones that do qualify for an offer. So I am trying to pivot away from that in some aspect and really probably go heavily on inbound or on outbound sources so that I am solo to that lead and I'm not, bidding on competition and whatnot.
Sounds good.
Time,
Thank
time
you,
for
Devin.
one more question.
I got one, Devin.
What up?
So we have two flips that I'm supposed to buy this month. And thankfully both of these people, their schedules are like kind of open. They don't really need to close ASAP because some of them have like post possessions and things like that. So I was talking to my guys this morning, and I think on those ones, I don't know if you've ever done this before, but I think we're gonna kind of pivot on those and try and just push for novations because I personally don't want to buy any more flips. I have quite a few flips right now, and they're all kind of selling this month. So I don't know, what are your thoughts on that, and kind of how would you explain that to the seller? And like, would you go up on price, or like how would you kind of pivot towards that?
First thing I would do is I would determine what I could make if I were to wholesale it. So I assume you did that. Do you know what you could make on each deal if you were to wholesale it to another flipper?
Yeah, one of them we could honestly, one of them's pretty skinny, like 5K, and the other one's like 15.
I mean, honestly, I mean, me and my buy box, like those aren't ones that I would even take down and flip. I mean, I
Yeah.
need a much bigger spread than that to even flip. The deals that I'm taking down and flipping are the deals that I'm making a 50 to 60K assignment fee on, right? Because I want to remove all risk. I want to buy these things at 50% loan to value to flip it. Especially, I mean, that's not even in a market like this, right? Because at the end of the day, we're wholesalers, right? We need our fast cash for on the wholesale deals to, make our payments on our flips and our developments and whatnot. So I mean, yeah, the best, I mean, obviously you could try a price reduction. I 1000% would not take those down as flips. Go ahead and re-underwrite them and finalize your numbers and take it to your best flipper and see what he's willing to pay for it. Worst case, you take a fee on the back end. Other than that, yeah, I mean, you could go ahead and try to novate it. Based off that, you should have a decent amount of spread to novate it.
Yeah, both of them are wholesales. They're built in like 2016. So I mean, they're kind of skinnier deals. So I'm like thinking, I mean, might just have to try and do innovation on these because wholesale is gonna be a little bit tough. So I'm just curious, like if you were gonna try and because I planned on buying both of these and we've had them under contract for a little bit and then stuff kind of started dipping and I'm like kind of sitting here watch everything go down. I'm like, the margins are just kind of getting skinnier by the day. So I'm like, I don't really want to buy either of these, honestly. So how would you explain that to the seller if you were in that situation and kind of pivot towards like innovation?
Yeah, so I'm gonna start again. You're gonna need your your articles to share with them, so that you're gonna explain your consensus, what you're seeing in the market, and obviously explain, since we've contracted and agreed on that price, it's been 3 months, it's been 60 days, whatever it's been, and you're basically framing it. So throughout that time frame, this is what's been happening in the market. Days on market has increased, supply has increased, interest rates have stayed the same. Therefore, our ARV changes, our holding cost changes as well. I'm not asking for a price reduction. I do still have a strategy on how I'm going to get you that 250 and then go into your MLS pitch.
Okay. Pretty simple then. Sweet.
Yeah, so I mean, you just have to let them know, explain that and say, but I still do have a solution for you. And then it's going to go ahead and be that. And granted, it depends how much more time you have on it. You probably will need to get some sort of extension. And then always say, we could definitely do it for a lower price, but I still think I can get you this price with more time. If they're in a time crunch, you have to go to a lower price. If they're not in a time crunch, you can do the novation and get the extension.
Okay, sweet. Thank you.
Cool. All right, y'all. Well, I appreciate everyone for showing up. Hopefully, you guys got some value out of today's call. If you guys do have any questions or anything, just shoot me a message on Discord. Other than that, keep chugging along. We're gonna get over the hurdle, and we are gonna keep dominating. So, y'all have a great day.
Thanks, bro. You too.